investment advice or research analysis, then that's a inappropriate activity. They're supposed to register with us. Since they're unregistered and they're still doing it, so they're breaking the law. So obviously our regulated entities cannot have any association with them because they're breaking the law. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of, portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law, and therefore again our regulated entities cannot associate with them. So the basic principle here is, what you cannot do directly, right? You cannot break the law directly. You cannot do indirectly by associating with people who break the securities law, right? So that's the thinking behind this. Now naturally there is, there needed to be certain provisos and certain carve-outs that we needed, because as part of our public consultation, we received a lot of feedback, and as you know, we take the feedback very, very seriously. So a couple of things which we have done is that if there are people who are exclusively engaged in investor education, but what that means is, directly or indirectly, they cannot be playing the role of investment advisor or research analyst. And of course, they cannot be making any claims of return. So you cannot say, I'm doing education, but I'm claiming that my students make 5 crores a year. So somebody who is doing pure education, not giving specific securities advice and not making any claims of performance, such people are outside the purview of our regulations. So our intermediaries and other people can freely associate with educational institutions and people who are doing that. The second is that there are some platforms, and we have had very constructive discussion over the last many months with some of these platforms, where they have demonstrated to us that they have the capability, both on a proactive basis and on a curative basis, to address the issue of people who are breaking the securities law. So if there are unregistered people who are putting content on their platform, or if there are people who are making claims about performance and these are all illegal activities, then they have the ability, and they've demonstrated that ability, to be able to proactively deal with such people and also curatively deal with such people. Then such platforms SEBI can specify or notify, and then what will happen is that our intermediaries and other regulated entities can freely associate with people through such platforms without any fear of breaking our laws, because we are notifying that yes, the platform has mechanisms, and therefore even if, let us assume on a random basis, some random case slips through which is otherwise illegal, the intermediary will not be held accountable, because we have notified that platform as people who are taking adequate measures to prevent wrongdoing, right? So this is the first proposal, and of course the responsibility of ensuring that they don't deal with people who are doing illegal work will be on the regulated entities, because those are the ones that come under us. The second area that the board approved today was in respect of the voluntary delisting. We had discussion on this some time ago, and we had mentioned to you that the board had asked us for some data which we presented to them, and therefore now this matter has also been approved today, and there are numerous elements of ease of doing business here. The first is that the fixed price process as an alternative to the reverse book building process will be permitted. Here the requirement is that the minimum price which has been determined as the floor price under the delisting regulations, over and above that a minimum of 15% premium will need to be offered if the promoter wishes to go for a fixed price process. So this is an additional flexibility over and above the reverse book building process. The second is that we had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in listed companies, right? So not every company can declare that I am an investment company. Provided that 70% of their fair value lies in listed companies, then they can avail of this. So this is the second flexibility, a new route for delisting which has been provided. In all of this, if the investment company is regulated by another regulator, naturally they would need to comply with the requirements of that regulator as well. The third flexibility that is being given is we are making the counter offer mechanism in a delisting process much more flexible. Earlier, the threshold for making a counter offer was 90% subscription. We have reduced that to 75%, provided that at least 50% of the public shareholding has been tendered. Okay, so this is the third flexibility. Of course, needless to say, the delisting process will succeed only if finally the acquirer reaches 90%. So the final vote still lies in the hands of the investor, whether they want this new acquirer to reach that threshold or not. The fourth area was the introduction of adjusted book value as an additional parameter for determining the floor price. So earlier, the book value was only a parameter that we reckoned for illiquid scrips. We are now introducing that for liquid scrips as well. When I say liquid, I mean frequently traded. However, there has been a carve-out which has been done for public sector undertakings. The reason for that being that very often the public sector undertakings have certain assets, particularly land, building and other things, which are not freely transferable. And therefore, while their value in their books may be X, these properties are not freely transferable, and therefore it would be inappropriate to put that as a minimum value for the valuation. The third thing is that this is more operational, but the reference date for computing the floor price has been changed from the existing requirement of the date of board approval to the date of initial public announcement. The whole logic being that this is the date when it gets crystallized, and we want the undisturbed price to form the basis. The next proposal is an ease of doing business, and you would have seen that we have a number of proposals which went to the board today on ease of doing business. And the reason for that is that we had, as many of you might recollect, we had created 16 different working groups for different stakeholders of the capital market ecosystem, with the mandate and the terms of reference that tell us what is it that you would like from the perspective of ease of doing business. So many of those working groups have come back to us now, many of them with interim reports, some of them with final reports. So you should expect to see a whole stream of proposals which are really reflecting, SEBI coming forward to do that ease of doing business for multiple stakeholders. So the first big set of such proposals went to our board today, and so you will see that reflected in the next few proposals that I'm going to talk of. The first is we had a additional disclosure framework for FPIs. This was an August 23 circular that we brought. This was in the context of concentrated holdings in a single group or very large FPIs, and we required them to make additional disclosures. There were various exemptions given. So we are adding one more to that list of exemptions, which is university funds and university-related endowments, which meet certain criteria. The next ease of doing business is in terms of the issue and listing of non-convertible securities. So basically debt securities, bond issuances. Here the whole thing was being driven by a desire to be able to put money into the hands of the issuer as soon as possible. So to streamline the process, because we've had so much automation in our market ecosystem and in the payment system in the country, that there is no need for us to continue to have timelines which are outdated. So in order to facilitate that, numerous things have been done. Simple things like the period for seeking public comments. So if the issuer is already an equity listed company who makes regular disclosures in any case, then there is no requirement for the debt issuance to be open for documents for public comments for 7 working days. So minimizing that. Reducing the minimum subscription period from 3 working days to 2 working days. And as we did in the listing of IPOs, where we moved the time for listing from T+6 to T+3, which has worked exceedingly well. There have been no problems at all. The ecosystem has really responded well. So this is now going to be an optional facility available to the market for a period of 1 year. So you can still choose to go with a T+6, or you can choose to go with a T+3. For a period of 1 year, this will be optional. After that, the T+3 will become mandatory. Also, some other, smaller reforms like, reducing the bulkiness of issue documents, and saving on advertisement costs, so allowing window advertisements for issuers containing a QR code or a link so that people can see the full advertisement there. And lastly, as part of this entire T+6 to T+3, which is on the lines of equity IPO processes, similar to that, therefore, for investments up to 5 lakhs which are being made through intermediaries, the UPI will then be the mandatory process because all other processes require manual intervention and delays. So in order to avoid that, we are streamlining this on exactly the same lines as equity IPOs. The next one is also related to ease of doing business for debt issuances. Again, minor things but important to the issuers. So for instance, the promoters. Right now the document requires their PAN number and personal address to be kept in the offer document. Now clearly this is a privacy issue and therefore this will now be deleted and only kept with the exchanges as a matter of record. A couple of other smaller things to align timelines, etc. Largely operational, but with a focus on ease of doing business. The next one again is for ease of doing business in the area of REITs and InvITs. A number of small proposals, largely going by the fact that the timelines the industry needs flexibility in timelines for doing various things, and if the investors are okay with it, for instance minimum notice period for meetings, etc., there should be no reason why the regulation should stipulate anything more. Also, we are providing for an e-voting option and an option to attend meetings through the electronic mode to all the unit holders for all unit holder meetings. So we believe that COVID times taught us this, gave us this opportunity to learn, and therefore we should carry it forward. And so REITs and InvITs will now mandatorily be required to provide an e-presence and an e-voting option. Also, you've heard us say this before, that the REITs and InvITs now are at a certain stage of maturity, disclosure and governance that the regulator feels comfortable with. And therefore, with all the risk management measures which are in place for these instruments, we now believe that dropping the trading lot to 25 lakhs would not be inappropriate. And we are comfortable with these obviously not retail investors, but high net worth investors coming in and at this reduced amount as compared to earlier. which was 1 crore?
1 crore.
1 crore. Also, given, as I said, the automation in the entire ecosystem, we have revised the timelines for payment of distribution to the investors for their payouts to 5 working days as from the record date. This is compared to 15 days from the declaration of dividend, etc. So this is again a efficiency and optimization process which will benefit the investors. Next one is in respect of AIFs. We have two proposals which got approved by the board today. The first is again ease of doing business, where in the past it was not clear to the industry that they were permitted to borrow short-term funds in order to meet shortfalls when they call for the money from their investors. So we are making it explicit that yes, we have no problem with that, but along with the guardrails that are necessary. So for instance, ensuring that if one of the investors out of 20 has not honored the call for funds and they are needing to borrow in order to make the investment, then the interest cost of that borrowing must be borne by the investor who has not paid. It cannot be borne by all the other investors as part of the scheme. So that is a safeguard for them, and also to ensure that investors have a level playing field and different drawdown schedules are not offered through leverage routinely. There is to be a cooling off period of 30 days between every 30-day borrowing, and also this is to be exercised only as a last resort. It cannot be routinely used in order to give preferential treatment to certain investors. So the industry was quite pleased with this proposal because, as I said, they didn't know that our regulatory intent was to permit it, so they were quite happy to hear this. In terms of large value funds, we have seen that there was a risk that some of these large value funds had the risk of becoming permanent capital vehicles, which becomes a problem on account of numerous things. First of all, the investor doesn't have clarity on his investment horizon. Then there are delayed disclosures and recognition of bad assets. Liquidity becomes a problem because if the fund is continuously extended, then the investor has no exit option. And also the performance of the fund managers is not reflected correctly. So in order to take care of this, now a cap is being specified of 5 years. In terms of the funds which are already in the market today, we have found a very elegant solution to deal with it. So we basically said that you need to align with the new rules within 3 months, but you have the flexibility in modifying your base tenure. And so, for instance, if you had said 7 years plus 7 years, right? Base is 7, extension is 7, but now you can't do 7 as the extension, you can only do 5. So now you'll say 9 plus 5. So you're still okay, right? You have the right to do that, so that none of the existing funds are put to any inconvenience. But going forward, over and above your base tenure, you can extend only by 5 years. Then we go on to another very interesting proposal related to investment advisors and research analysts. We are facilitating what we call a safe space for investors to be able to differentiate between regulated and unregulated entities. This is a purely optional mechanism for the registered entities. It's not mandatory. But what it will give is an ability to an investment advisor to differentiate himself or herself from unregistered entities, because the payment mechanism through which the investor is expected to pay the fees for investment advice will be only a couple of designated entities who will facilitate this safe space. So if the investor is paying through that safe space, he knows that he is dealing with a registered entity, and he knows that the payment channel through which he is paying is a safe payment channel. So we believe that this will over time get traction, because the trust in the system will improve, and that the good players in the market who are registered good intermediaries, they will use it as a differentiator and advise their investors to really come through this route, because then they can get a lot of comfort that they are dealing with the right set of people. The next proposal is related really to the market infrastructure institutions, doesn't directly impact the investors, but this is basically a set of criteria, basic criteria on the basis of which the market infrastructure institutions will be assessed by external evaluators once in 3 years, and every year internally by themselves. The purpose here really is that a recognition of the fact that market infra institutions are not like any other normal company or listed company. They play 3 very different roles. The first is the provision of what is practically public infrastructure. It is in private hands. These are private entities, often listed, but it serves the purpose of being like a public infrastructure. So there's a huge responsibility to ensure that it functions like a public infrastructure. The second is that they are first level regulators, so they must perform the role of being first level regulators. And the third, of course, is that they are expected to be running an efficient business in a nice, efficient, cost-effective way with a lot of innovation. So all of these 3 aspects of how we expect a market infrastructure institution to be run is captured in this framework, and with the suitable weightages being given to all of these factors, so that no one aspect of the functioning of an MII skews the way in which they function. The next proposal is cybersecurity and cyber resilience framework, which has now been will be notified by SEBI for all its regulated entities. The 2 important aspects of this: number 1, we have taken a risk-based approach, or a graded approach as we call it. We have defined 5 categories of regulated entities based on their span of operations, number of clients, trading volume, asset under management. So basically, what is the impact of this entity were there to be a cyber attack or a technology resilience problem in them. So these 5 categories are, of course, the MIIs are right on top. The qualified entities, like qualified brokers, we have qualified stockbrokers, we have qualified RTAs. So they come into the second category. Mid-size, small size, and self-certified regulated entities. Now, the second interesting aspect of this is, and this was based on market feedback to our consultation paper, where we talked about data localization. The industry has requested us to do a data classification and localization. So the regulatory data must reside within our shores so that the regulator has instant access to it. However, certain types of data which we consulted with our high-powered advisory committee on cybersecurity, some of that data we are now calling more like IT data, and that we are giving a dispensation that it can be offshored, because many people have cybersecurity monitoring globally rather than locally. So we felt that it was perhaps suitable to do that, but certain guardrails have been put in place. For instance, within 48 hours the data has to be brought on shore, etc., etc. The last part, which is not here, but this was actually implemented some time ago. It was not made mandatory. Now for a certain category it is being made mandatory, the smaller entities, which is that there is a market SOC being the Security Operations Center. So as we know that smaller entities find it very hard because this stuff is expensive. Cybersecurity protection is expensive. So we were not wanting our smaller regulated entities to be disadvantaged, and therefore we created a concept of cooperative and collaborative cybersecurity creation. So there will be at least 2 entities in the market ecosystem that will offer this market securities operations center, and the small entities can simply hook up to them and get that protection. It's a base level of protection, and the cost is very, very reasonable. So let's say that a small broker has only 5 nodes in his system, in his office, for which he needs protection. So that will only be in the region of 50 to 70,000 rupees per annum. And if we, see more and more traction, and if this cost can be brought down further, that would be even better. But the objective is that our market participants, in order to be able to protect the data of their investors, and in order to ensure that they are up and running and not susceptible to cyber attacks, the protection that they need should be available in an affordable fashion. So the market SOC is really going to play that role. Another item which is not here in this sheet but I'd like to share is again related to our market infrastructure institutions. We have right now a concept called financial disincentive, which is meant to trigger whenever there is a technology lapse or a technology disruption amongst the market infrastructure institutions. It was an automatic financial disincentive. Earlier it was designed to trigger on both the institution as well as the key personnel, the CEO, the CTO, etc. It's been some time since that was initiated, and on review it was felt that while the financial disincentive should remain on the institutions, on the individuals it should not be an automatic penalty, because the role of the individual, see, for the institution it's a yes no answer. Was there a lapse, was there a failure? Yes, no. But when it comes to an individual, a certain amount of judgment has to be applied as to whether that person had really done his job and had done everything in his power to make sure that the systems stay up and running, or was there a error of omission, commission, whatever it was. So judgment needs to be applied, and therefore we will not have an automatic disincentive system on them. So that will fall off now. Of course, if there is really some egregious action or inaction which has happened, then SEBI is always within its rights to take other action. But this automatic application of financial disincentive will no longer operate. Lastly, the annual report of SEBI, which is placed before the Parliament, was also approved by the board for placing before the Parliament. And this is not. It's not part of it. Okay, sorry. One more aspect which has been hotly discussed in the media is on the entry and exit of scrips in the F&O segment. So the board today approved the new criteria.
It's not in the press.
We will give you a copy.
Okay, no.
We'll give you a copy. So, Muru, can you get this photocopy?
Extra copies.
Not the top part, just the text. Just the text.
Could you finish the sentence? New criteria for
Suspense.
For F&O stuff.
we'll live with the comes back.
Okay, for F&O stocks. So, first in terms of the regulatory thinking behind it, and then the specific criteria, how they are changed, we're going to give you the details. So, that's what will be on that sheet. But first, the regulatory thinking. The regulatory thinking is in 2 parts. The first is that in order to ensure that there is a healthy linkage between the cash market and the F&O market, many years ago we had brought in a regulation that there will be physical delivery of open positions on expiry. Right? That was the first step we had taken in that direction. The second step that we are taking in that direction is now today to say that the criteria of which stocks will be permitted in the F&O basis the criteria of how their shares behave in the cash segment. We need to adjust those parameters because they were, in 2018, they were set in 2018. And obviously in the last 6 years, the market has grown and the whole volume has grown, size has grown, everything has grown. So those parameters which we had set 6 years ago are no longer appropriate. So in line with the way in which the market volumes and value has grown, we have changed those parameters in terms of eligibility to enter the FNO stocks. We'll give you the specifics very shortly. The second thing that we are doing is to introduce or extend the concept of product success framework. So as you know, in our indices, we have a product success framework, which means that the exchanges can introduce a new index for FNO trading. But if volumes do not pick up and it is not a success, then after a certain period, it has to be withdrawn. Why is this? Why is it that we have this rule? Is because we know that if there is a contract available in the market which has very thin volumes, it is very, very vulnerable to manipulation. The amount of money you need to manipulate an illiquid contract is very, very small. So therefore, it was imperative that that same protection which we have given on the indices side should also be given on the stock-specific FNO. So we have extended the concept of product success framework to stock-specific FNO as well. So if the trading doesn't reach a certain minimum level, which means the trading is too thin, it is very vulnerable to manipulation and therefore it will need to exit. But this exit will only be after a minimum period of 6 months. So for 6 months, the question is whether the volumes are picking up or not. So there is a glide path to implementation of all of this. You will see that in the details that we will circulate to you. And so with these two changes, there will be some differences. There will be some stocks that will go out of the list and some which will come into the list.
Do you have numbers on how many?
You see, we can only backtest based on the past data. But obviously, these will come into effect only later. So I think we would not like to do that because then it's speculation as to whether those are going to stay or go or come, because nobody is going out today or tomorrow. We're going to wait for that 3 month, 6 month period and watch the underlying and watch the FNO volume, and only then will there be an entry or exit.
Based on volume hasn't changed. Based on today, how many stocks may be eligible? Correct, and if the volume hasn't changed in the last 2 years, 3 years.
I've been advised by Mr. Anant Narayan that it would be inappropriate for us to talk about that.
Does it remain at the same level?
Let me put it this way. The total number of stocks actually goes up by a handful.
So if we do the back testing,
Goes up by about 5 or 6.
if we do a back testing as of now, it's 182 currently. It goes up a little bit marginally. There are some which exit, some that come in. It's not a very large number that goes in and goes out. But the caveat we want to emphasize is we don't know. It's as of today. So the PSF, as Chairperson just mentioned, becomes applicable only 6 months from now. So we can't apply today's criteria we don't know what it will be 6 months from now. Likewise, for the existing stock, the 182 stocks, we're not going to apply the exit criteria right away.
Yeah.
We'll give them 3 months.
3 months.
Before that starts to kick in. But as things stand, if you do a back testing today, it goes up marginally, reflecting the fact that we've not done too many entries over the last few quarters.
And will it be auto
Exit to kick in.
For existing.
Is there an auto route or do exchanges have to conduct the exercise, the one which they do?
It's the same process which is followed today, which is every month they do an exercise to back test and see whether there's fresh entry happening or exit that needs to happen. So the same criteria which will continue, no change on that.
No, process is same,
Process
criteria is
the
different.
criteria has been obviously marked up given that.
Post circular, right, sir?
I'm sorry?
3 months post you issue the circular.
That's right.
Yeah, circular will come quickly. So 3 months, so roughly you should expect that nobody is leaving in a hurry as per the new criteria for the first 3 months. And for this new, extending this concept of product success framework, nobody is leaving until 6 months.
By the way, just to add, this product success framework by itself will not cause too many exits.
Yeah,
As
it's a
things
handful.
stand right now, it's a complete handful. Of course, we can't speak as to what will happen 6 months from now. It's more like a safety system being put in place
For the future.
to ensure that there is adequate liquidity in every single stock derivative.
Even for PSF, I mean, whatever the analysis you would have done, how many stocks you are finding?
Handful.
Really handful, as in
Is it as per the the discussion paper that came in? You mentioned products success.
Yes,
framework in
yes,
it.
yes.
Have you changed that framework or is it?
There is
We-
one
we will
technical,
circulate.
yeah, we'll circulate it. There was one technical correction we made because of the way that the market computes buy and sell volume. So should you count buy plus sell, or you should only count buy or only count sell? So for that, on account of that,
That's right.
we've made a change.
Can I read out the criteria, ma'am, very quickly?
Yeah.
So the criteria as far as the top 500 stocks in terms of average daily traded volume as well as market capitalization, that doesn't change. That's exactly identical as before. The median quarter sigma order size, which was 25 lakhs previously, is now 75 lakhs. The market-wide position limit now will stand at 1,500 crores. So again, in sync with the movement in the market cap since 2018. 1,500 crores. The average daily delivery value is now being put at 35 crores.
This has gone up from 10 crores.
That's gone up from 10 crores because the traded volume and the delivery volume has gone up by over 3 times between 2018.
500 to 1,500 for MWPL.
That's right. And 10 to 35 crores. Now the PSF conditions very quickly. The first one is identical to what you have on indices currently, which is 15% of trading members or 200 trading members, whichever is lower. That's identical to what you have on indices. Again, what is identical to indices? Trading on a minimum of 75% of the trading days during the review period. Average daily turnover of at least 75 crores during the review period. This is what Chairperson mentioned earlier in the discussion paper. We had mentioned 150 crores because we had taken two-sided volumes. Now we are taking one-sided volumes, and therefore this number is 75 crores. And average daily notional open interest of at least 500 crore. So these are the 4 criteria that we're putting up for PSF.
The applicability, as you said, that will be notified, and after that.
That's
Why
right.
have you taken a notional open interest and not the premium open interest? Because the maximum open interest comes from option.
So we'll come to that subsequently. As of now, we're not changing what we have in the PSF that we have for indices. We've kind of copy-pasted that into the single stocks as well. If there is a larger change to be done, that will be done separately in terms of the way we measure metrics,
Just
etc.
one thing you of course said that the net addition would be very small, about 5 to 6 stocks. But is the churn very big?
Not very
Not
large.
very big, no.
Couple of dozen.
Yeah.
And couple of dozen or dozen?
Couple of dozen. As in 24, in the region of 24. 2 dozen, couple of dozen. You all worry too much.
So actually the number of stocks, just to reiterate, should go up based on today's, backtest.
Backtest.
Now, one question obviously noticed. Another one is that besides this, we are mentioned that 2 entities will be offering market football operational centers. So, any selections on that or bids because how would that be done?
So right now what we are expecting is that the 2 exchanges are likely to do it.
And the fee collection will also, of course, investment advisors will also be through exchanges or through SEBI Board Meet?
No, the fee collection is a mechanism which, as you know, BSE is the administrative body for IAs and RAs. So it is planned that that will be certainly one of the entities that will be designated for that. Most likely the other set of people who have shown interest, and as you know, we generally prefer to avoid monopolies in any function, so we like at least 2 players in every function. So most likely the people who have shown interest and are almost natural entities to do that is the MF utility.
And what do we mean by external evaluation of MIs? What exactly does it entail? What all does it have?
It means that there will be an agency, the exchanges and other depositories and everybody will send us 2 names of who they think are non-conflict entities who are capable of doing that assessment. They will send us a couple of names, we will select one, and based on the detailed parameters that have been laid out, and these have been laid out in consultation with the MIIs. So their industry standards forum, we have, as you know, a very good system of industry standards forum now. So their forum has sat together and designed this for themselves in consultation with SEBI. So we are also very comfortable with it. So it's a very detailed set of parameters where they will undergo an assessment every 3 years externally.
And now for the delisting part, last time when it was discussed, you said that there's not enough data for the exit. As some reports or some findings from Indian companies for delisting, where we got to realize something more or something? How
We shared additional data with the board today, on the basis of which this proposal was approved.
I have some questions on delisting, if I may ask. So specifically, could you offer an illustration on how this optional or alternative to reverse book building will work, and what kind of companies or?
It's available to everybody.
Correct.
So anybody who says that I would rather go for the fixed price option, so basically the floor price is still computed as per the SEBI regulations. You add another 15% on top of that.
Yeah.
Above that number, you can come to the market and say that here is the offer that I am making and I want to delist. And if you reach the threshold of 90% with that fixed price offer, then you can go ahead.
That's exactly the question I in fact had.
Mhm.
That the threshold of 90% has not been easy to reach, even with sort of high price tags in the reverse book building process. So, what kind of company is expecting to reach it with a 15% premium to current market share?
Now, how did you arrive at 15% premium?
So that was one of the data sets that the board had asked us to look at, and we looked at that data and we looked at the past cases that have been there and what kind of premiums were there which were given at that time for the successful issuances, and basis that there was a decision made on this 15% premium.
Because the voting requirement doesn't change, right?
The threshold doesn't change.
Correct. So I'm just curious. I mean, companies wanted a fixed price mechanism because
That's correct.
they said they were being held ransom by small groups of shareholders in the reverse bookprint process.
That's right.
And that being held ransom was that they would not approve. I mean, they were large enough in number to stall the delisting.
Right.
Because, there wouldn't be 90% acceptance at a certain reasonable price.
Right.
So now, how is this going to work? If there are small groups of shareholders holding companies to ransom there, why would they agree to a 15% premium?
So the question is, I would break it up into two. First of all, this is based on what we have understood from our advisory committee as to what works for them, what doesn't work for them, and having to balance the fact that finally the decision should be with the shareholder. So that is the balance we have to strike. Our understanding from the market is that the process of reverse book building and the fact that it can be taken, that the final cutoff can be taken to stratospheric levels, is what is bothering them. And even there, by the way, as I said, we have made some liberalization so that they can offer a, what is it called? What price? Revised price, etc., at a much lower threshold of 75%, etc. So our understanding from the market is that this would be a useful tool, helpful to them. Exactly how they expect to overcome cornering of shares, we believe they know the market better than us.
And how will you arrive at fair value of the company from a shareholder's point of view? Of course, there is one section of the shareholders who may be cornering, but there are other shareholders who would like to get a fair value while.
That's right.
So the SEBI formula may not be giving you the fair value.
In which case you don't surrender your shares. See, the final vote lies in the hands of the investor. So if you think it's not a fair price, despite the premium and everything, you don't surrender your shares. They'll not get to 90%. They'll not be able to delist. So they have to make it worth your while.
Did companies offer any explanation for why they thought this would be more, that this would work when everything else hasn't worked? I'm just curious.
I think there is, you see, the request for a fixed price offer has been there for a long time. This is not the first time that industry made this request. So, at the end of the day, an additional option is always gives flexibility to people. Is it going to be a rip-roaring success tomorrow from their perspective? We don't know. But this is something that they wanted.
I guess they're assuming it's a take it or leave it kind of situation. So
this
is what we're offering. Which they could do with even RRB actually, because they had the option to do, revised price there as well.
No, only if they hit 90%. You couldn't do a revised offering without. No, you have to opt for one.
You've got to opt for a fixed price, where the minimum is 15% above the floor, right? Or you can do a counter offer later on.
Considering on the success rate, assuming will be less for this, so will there be a cooling off period before they come up with another?
I forget now, there had been some discussion on cooling off period, no? Do we have somebody here from? Yeah, there had been a discussion on cooling. I can't
It's
remember.
either
that.
6 months or a year. We'll confirm.
We'll confirm that.
Yeah.
We will just get somebody
May I
from
ask one
CFD.
more question? You permitted, SEBI had permitted a short while ago automatic, not automatic, but logical delisting through M&A. I'm just wondering, does this fixed price mechanism fit into that as well as an option? That if you were to acquire a company and then seek to delist it as part of that sort of process, will fixed price be an option available there as well?
The question of acquisition, change of ownership and delisting conceptually remains the same. So whatever concessions were given over there to say that if your intention is to change ownership and delist, then certain concessions were given. So what is the mode of delisting is not material, because both modes of delisting are okay for us. So whether you follow this mode or that mode,
So this will be available even for that?
it will be available, because the mode of delisting is not in question here.
And there was another thing in the consultation paper, which was with respect to the reference date being the date of intimation to the stock exchange or the board meeting date. Nothing's come from the reference.
Now it has changed, right?
Modification of the reference date for computing floor price. Yeah, that's what I said. That not from the date of the board approval,
But from the date of
public announcement. So that it's an undisturbed price.
Ma'am, with respect to this delisting.
One sec, I'll just take that question, yeah.
I just have a question on the safe space that you have created for registered investment advisors. One is that you've made optional for them to choose this safe space. Earlier, I thought there was an idea where it would be mandatory for all the registered investment advisors.
That is correct.
For making it optional.
So, as you know, we do public consultation with a completely open mind. So when we say here is a proposal and we think it will be good to make it mandatory and people say no, we don't think so, we are happy to give the market that leeway and that flexibility. So those who wish to use it as a competitive advantage to give comfort to their clients are most welcome to. Our job is to make available and facilitate things. Beyond that, we are quite happy for them to make that choice, and it's early days. Let's see how the whole thing gets traction. As you know, there are many things we do on a glide path basis.
So initially a lot of hesitation was there among the RMA community about this proposal. So after a lot of consultation, how do you bring them on board? Have you brought a lot of them on board? Or there is still
Yes, there is. Kamlesh?
So now after we explained them the advantage of this particular provision and our proposal that we have considered, a lot of people have shown interest. Now we don't know how many would opt for it. It's too mature to predict that. But yes, that initial resistance was overcome with the help of discussion, explanation, and now that it is optional, they can view their pros and cons. That what are the advantages? There are certain advantages, right? That if you adopt this mechanism, the investor who is seeking your advice knows that I am dealing with the right person, and the kind of illegal activities that are going on right now, he's sure that he's not going to fall prey to such wrong activities if I am dealing with this particular person, because he has that mechanism in place to safeguard my interest. So those are advantages. So we will see that how it gets traction.
Is it live already?
No, not yet. It will become live.
The systems are under development, so they'll come live soon.
And the RMAs
Soon.
have to pay a fees to be on board that platform?
Very small.
It's very
Very
small.
small,
It's some
very small.
4,000 rupees per annum or something. 4,000 rupees per annum.
Which are these platforms? Do you have any platform?
So that's what we said, that they'll be offered most likely by BSE and by MFU, Mutual Fund Utility.
Ma'am, with respect to the investment holding companies, once the investment holding company distributes its shares, the underlying, and the cash instead of land and building, will it cease to exist, or because it's not stated clear in the release that how the delisting works? One after the distribution they can delist, or once it distributes the shares, you can do a capital reduction and just take off delist the company.
Yeah, correct.
Technically.
If all the shareholders, the public shareholders, have been paid either cash or the value or the underlying shares, it's over after that.
So you can reduce the capital.
There are no more public shareholders left.
Okay. Or the criteria of normal delisting which you have modified.
Yeah. This is an option available to investment holding companies. You don't have to go through this route.
And
It's an
another-
option.
Another clarification with regards to the FNO stocks mechanism. So if hypothetically the circular comes after 2 weeks, so the criteria of entry starts from the third month, right?
No,
Within
criteria 3 months. for exit starts from the third month.
Okay.
Entry will start right away.
Immediately. Okay. Thank you.
Ma'am, just wanted some clarification on a couple of things.
Sorry, who? I can't.
Yeah.
Oh, here.
You broke your heart.
Sorry.
Broke your heart.
No, I was actually wasn't in the
Line of sight.
exact. Just wanted to understand around FNO, there have been a couple of reports which are out. One thing is that is there a committee which SEBI is formed to sort of ensure an orderly progression of the FNO market? What is this committee? What is going to be the responsibility of this committee? Second thing, there was recently one report as well which spoke about there being some examination mandatory for trade into FNO and all of that. I mean, just to understand, is there anything apart from these things also that you're looking at to sort of
Yes.
regulate FNO?
So, as you know, we have standing committees, and we have one of our standing committees is the Secondary Market Advisory Committee, and obviously within the secondary market, FNO is a very big segment. So, therefore, under the Secondary Market Advisory Committee, under SMAC, it is quite normal for us to pick up areas of focus from time to time and put up an expert working group or a working group to focus on a specific aspect and then present its report to the main SMAC. So, this area of FNO trading in terms of what more do we need to do beyond, what we've done is a very simple thing, right? Just simply change the criteria proportionate to where the market has gone. So, what more needs to be done, what is happening in terms of the volumes, the retail participation and so on. All of those aspects from all the 3 dimensions, whether it is that we want to continue to develop our market, we also need investor protection, we also need good risk management. So from a very comprehensive point of view, we need to have a review of this, and so an expert working group has been put together under the SMAC, under the aegis of SMAC, and they will deliberate on this and then they will give their report to SMAC.
Just an addition to that, you would remember that Finance Minister in May had warned about the retail explosion. Then last week you would have heard on 18th of June, RBI Governor also said, although he said that it is not Bank domain, it is for SEBI to see the spurt in the volumes in FNO segment. I want to understand that now that you mentioned that the committee report will be submitted and after that only any action will be taken, or is there any separate thing which SEBI is thinking or following this?
No. As you know, sorry, just one moment. Just got a confirmation on that discussion we had on cooling off period between the 2 modes, 6 months of cooling off period.
For delisting.
Sorry, so back to FNO, yes, you're right. So, as you know, we are committed to a lot of, we are committed to public consultation in everything we do. The only caveat to that is wherever something is of a surveillance nature. So something that our surveillance team does and gives instructions either to the market or to the stock exchanges, those do not go through a public consultation process because they are surveillance concerns in the market that somebody is up to some serious mischief. So apart from that caveat, I would say that on a policy basis, we've constituted this expert working group. It will submit its report to SMAC. It will be deliberated. After that, there will be public consultation. We will not do anything without that. That is our constant way in which we bring about policy change.
Is there a specific timeline? Sorry, is there a specific timeline? Is there a specific timeline to this process?
I don't think so.
So the working group, as ma'am said, the expert working group has been set up. They will meet shortly. They will come out with recommendations. We will take that to SMAC, and then we'll put out a consultation.
Has the working group been given a period of time within which to submit?
Nothing has been stipulated. See, they need to have the time to make their deliberations. So
sometimes committees are given like within 6 months to sort of come up.
So typically the chair of the working group is given a lot of latitude. In case there are certain short-term priorities he or she wants to pick up, we pick them up. In case it's a longer-term report, we give them a lot of latitude.
Now, I just want to understand, I mean, if I were to ask you just in simple language, F&O as a category, of course, it's open for participation from every kind of investor right now. These are largely liquid stocks. We've reached a point where concerns are coming from owners. There's a committee which has been set up in terms of its views. If you had to explain what is the essential concern in the whole of it with the current situation, how would you?
I think the concerns are on 3 different dimensions. The first dimension is from which we think that we are in very good territory, but there's always room for improvement, is there systemic risk in the capital markets ecosystem itself, right? So are we running a risk of something that if there is some black swan event, what happens? So we think that we are reasonably well protected. However, as I said, from a risk management point of view, there is always room for improvement, and so that is one area that we will look at. The second is from a investor protection point of view. We have, as you know, published that research report to say that 9 out of 10 people lose money in F&O, and it is not a small sum of money that they lose. Now, we have adopted an approach of disclosure, for the investors to be aware of the risk and to, then make up their minds as to whether they still want to proceed or not. However, the trend that we are seeing in terms of even the type of trading that is happening. So, concentrated in weekly options, only on the expiry day, in the last 1 hour. Now, these are just speculative bets, right? These have no nature of hedging. These have no nature of, I would say no other nature other than speculation. So the question is now that, what is it, if anything, that needs to be done further from an investor protection point of view? Particularly and we have seen anecdotally cases where people borrow money, including by, their parents are mortgaging their homes and everything, and then they are borrowing that money and putting it into this speculative activity. Is that a good thing? It's not a good thing. So what, if anything, should the regulator be doing on this issue of investor protection is the second area. The third area is also from a larger macroeconomic point of view, that there is a large amount of money which is therefore now going from household savings into what is essentially not productive economic activity. Right? This is speculative activity. This is not going into any capital formation of any kind in the economy. So what is it that we as a country should also be thinking about at a larger policy level is the third area that one must think about, especially as the proportions have grown. We looked at some data from 2018 to 2024, and the numbers are very, very stark. So, in that context, yeah. No, not this. I'll just read out some numbers to you. As you know, we are very data driven. So, हम सारे टाइम नंबर अपने पास ही रखते हैं. Yeah. So, turnover in index options in premium terms has grown from 4.5 lakh crores in 2018 to 140 lakh crores in 2024.
140 lakh.
4.5 lakh crore has gone to 140 lakh crore between 2018 to 2024. This is turnover in index options in premium terms. Overall turnover in derivatives segment has gone up from about 210 lakh crores in 2018 to 500 lakh crores in 2024, and the share of individual investors in index options has gone up from 2% in 2018 to 41% in 2024. 2020, FY 2024.
So you are saying that the working group will also consider this diversion of money or household savings towards unproductive.
It's a factor. It's a factor. It is not our principal mandate, but it is a factor that we need to keep in mind.
Ma'am, but we spoke about the second larger macroeconomic point of view, and we spoke about the fact that it's speculative in nature, and now concentration of trading coming into weekly options. But it's SEBI which is approving the products.
That's correct.
So so are you going to relook at those products?
And
Maybe we should.
There are a couple of products that are doing very well for some of the
Maybe we should.
right? I mean, the 0-day product is.
So,
For what?
see, the working group has been given a very wide mandate. We have our overall objectives, and this is an expert group. They understand the business, they understand the market, and we have given them a very wide mandate to say what are all the things that you think we should be doing. So they are familiar with what is happening. Data providing, obviously, SEBI provides all the data because we have the data behind it. So all the data that is going to form the basis of analysis and recommendations to the working group will be provided by SEBI.
So you will be open to the finance ministry coming out and putting restrictions in terms of taxation for speculative trading going forward in that sense?
That's well above my pay grade.
You will approve that measure.
That is well above my pay grade.
But will you approve that measure?
It's not for us to approve. It's for the parliament to
We have to
approve.
start with at least, I mean, the weekly expiries.
So there will be a consultation process. Please put in all your suggestions and thoughts, feed them into the process.
You have nicely articulated the concern area, but on the other hand, this is seen as a success story. I mean, Indian trading volume is the highest in the world. So how do you balance that? And then, I mean, this is also a great source of tax evasion for the government. So it's like a case of whether one should allow, I mean, whether cigarette selling should be allowed.
No, you're right. I think you're very right. After all, even the statutory warning that we gave is like that only, right? On every cigarette packet, smoking is injurious to health.
I can add that also if you want.
So, I think the analogy is not wrong. As I said, this is a very wide mandate to the group, and what is equally important is that that's an expert group. It will feed into our standing committee because all policies go to that same standing committee, and then we will see. Let's see what recommendations they come up with and what if. Nothing has been stipulated. They need to have, invariably what tends to happen, like I said, even for the ease of doing business working groups that we had, they gave us interim report and then they gave us final report saying this is, low hanging fruit, let's just harvest it quickly. So this is our first set of recommendations. They may give us an interim report, then they may take more time to give us a final report. These are all the normal ways in which our working groups work traditionally.
What are the top points, as you said, mentioned about the wide mandate? I mean, what are the top few areas which is mandated?
Let them do their job, no? They are the experts. Let them do their job. Haji.
This question is coming after a very long time, but since the press conference is also happening after a very long time. But ma'am, on that mutual fund total expense ratio, after that, the last discussion that happened was that there was some more data which was required. Just want to understand, is that now done and dusted and it remains where it is, or does it still exist in the area of consideration and can come up?
I think Yash owns some stock in listed AMCs. ये छोटा नहीं है Yash. So, huh? Expert.
Long है short है पता नहीं.
So this is exactly why I cannot make any statement. Because we have so many listed entities. So we had at that time, if you recollect, it was the first time that we deviated from normal practice on two counts. One is that even before we started discussion and deliberation, we put out a press release saying we're going to discuss it and think about it because it's price sensitive. And the second is that the first set of proposals that we made were without co-creation with the industry, which is normally our way of doing things. We always co-create with industry, but this we did without because it was price sensitive. So those were the two deviations we took because of this price sensitivity issue. So it is precisely for that reason that we cannot share anything further with you. If it comes, when it comes, it will come, and everybody will know at that time.
One question was big influence part of it. Ma'am, you spoke about the fact that there is a carve-out for certain investor entities which are into investor education, and the second one was specified digital platforms who are looking at and correcting or taking action.
Correct.
Can you have you identified those platforms?
Yes. So we will notify them in reasonable time because we are already working with a number of them to try and assess their capability as well as commitment, because both are required. As you know, I'm a banker, so we used to say NPAs happen because of the person either does not have the ability to pay or the willingness to pay, right? So a platform may have the capability but not the desire. So it is our job to then assess whether they have both the capability to do preventative and curative, as well as the commitment to do that.
And
so we can notify, we can also de-notify. So it's not that the notification is forever.
Who will fund those operations? Because if these entities are into that kind of work as well.
Those platforms, that's their business model.
Self-sustaining model.
Those will be. No, not at all.
And my question is around this, with respect to, as there are more and more companies to this year, there are also MNCs which are, so is the thought process that exit also should be easier, and if we don't work, will there be further easing? And because if a company is listing, you would also like have a framework that they can deal for two private.
No, correct. See, you've heard us say many times we don't like Abhimanyus in the market, right? So we don't like it when people try and capture investors and don't give them an exit option. Similarly, why should we say that, once you are listed, you can never leave? It's not Hotel California, right? So we are good. This is a rich, vibrant market, and we welcome people to come in here. But if for some reason they need to exit, they should also have the ability to exit.
One more question around what is the thought process of this whole classification of promoters? There are instances where companies have filed their compromise and being up and saying that we are more and these guys are not as good as more. So how does SEBI approach that? And is there a fixed formula to know whether you are a promoter or?
So, the guidelines are there, but as you know, the market can be quite innovative. And find ways that are, I would say, technically in line with the regulation but not in spirit in line with the regulation, then it is the job of SEBI and its officers to identify that this is not an in spirit compliance, and that various other innovative structures have been used to say that we are not promoters, whereas actually they bear all the nature and character of promoters. So that is our job. When we examine the documents, we examine all of that in detail, and we'll continue to do that. Yes.
So, could you give an example, more example about what is pure investor education versus advice? So if
Yeah.
someone making a video on stock
Sure. So, if you give any recommendation on any specific stock, mutual fund, REIT, bond, these are all securities. If you say buy this, sell this, hold this, that is investment advice. That is also a recommendation in terms of being a research analyst. The minute you utter a specific word, you are an investment advisor or a research analyst. If you are generally teaching people about how does the F&O market work, what is a collar, what is a floor, what is a cap, all those things are fine. That is investor education and we welcome it.
Ma'am, in the last board meeting, you had approved an institutional mechanism for front running or instances of front running if it happens at a mutual fund house. That hasn't been notified yet. What stage is it at, ma'am?
It's at a very advanced stage, and I think we need to give the industry some time to deal with it, I mean to put in the system. So I think the large mutual funds above a certain threshold, I think it's 10,000 crores, will need to do it within 3 months, and the rest will have time of 6 months to set up all their processes and systems. So that's what will happen. It will happen shortly.
This is after you come up with a formal notification.
After we notify, that's it. All our deadlines start from the date of notification, which should be shortly.
मैम 3 सवाल होंगे। पहला ये कि आपने वॉलंटरी डिलिस्टिंग की बात की, रेगुलेशन आगे, लेकिन जो मैंडेटरी डिलिस्टिंग है उसका जो रेगुलेशन है, और हम ये देखते हैं कि किसी एक एक्सचेंज में बहुत ज़्यादा कंपनियां लिस्टेड हैं और सबसे ज़्यादा जो मैनिपुलेशन के लिए इस्तेमाल होता है वो उन्हीं शेयरों में होता है, तो उनके फ्रेमवर्क को रिव्यू करने का कोई प्लान है? पहला सवाल। दूसरा सवाल तो ये है कि बहुत सी कंपनियां जो आईबीसी के थ्रू वो एक्सचेंज पर लिस्टेड है बट आईबीसी में चली गई हैं, उनके पास वैसे भी इतनी मतलब फाइनेंशियल कैपेबिलिटी नहीं होती कि वो ठीक हालत में होती तो जाती, तो उनके ऊपर एक्सचेंजेस नॉन कंप्लायंस की पेनल्टी लगाते हैं। तो एक तरह से क्या इसको रिव्यू करना चाहिए, कंप्लायंस होना चाहिए, लेकिन जो पहले से ही बुरी हालत में उस पर पेनल्टी लगाएंगे नॉन कंप्लायंस का, तो वो क्या मतलब लॉजिकल है? और तीसरा सवाल ये था,
अच्छा मैं शुरू करती हूँ, फिर आप सोच लीजिए। कंपल्सरी डीलिस्टिंग में देखिए एक रूल है, उसके हिसाब से अगर एक कंपनी लिस्ट होती है और उसमें जो भी ट्रांजैक्शंस होते हैं वो कायदे से होते हैं। इफ वी फाइंड, अगर हमें ऐसा लगता है कि वहां पे मैनिपुलेशन हो रहा है तो हम एनीवे एक्शन लेते हैं। आपने तो देखा ही है, आजकल वी कीप यू क्वाइट बिजी, कभी इस मैनिपुलेशन पे ऑर्डर आ रहा है, कभी उस मैनिपुलेशन पे ऑर्डर आ रहा है। सो जहां तक मैनिपुलेशन का सवाल है, क्योंकि इन छोटी कंपनियों में मैनिपुलेशन इज इजियर, दैट वी ऑल नो। कंपनी छोटी है, द अमाउंट ऑफ मनी इट टेक्स टू मैनिपुलेट दीज स्टॉक्स इज लोअर। सो वो हमारा सर्वेलेंस का काम है, हमारा और एक्सचेंजेस का। लेकिन हम छोटी कंपनीज को एक्सचेंज में वेलकम करते हैं, क्योंकि आगे बढ़ के छोटी कंपनियां ही बड़ी कंपनियां होती हैं। नोबडी इज बॉर्न बिग और वेरी फ्यू कंपनीज आर बॉर्न बिग। Small companies become mid-size and mid-size become large size. So, I don't think that fundamentally हमें उनसे कोई तकलीफ है। अगर मैनिपुलेशन हो रहा है तो हम सर्वेलेंस एक्शन लेंगे। अब अगर वो रूल्स के हिसाब से नहीं बिहेव कर रहे, जैसे डिस्क्लोजर्स नहीं दे रहे हैं या फीस नहीं पे कर रहे हैं, तो वो कंपल्सरी डीलिस्टिंग में चला जाता है। अब हमारा हमें दिक्कत यही होती है कि कंपल्सरी डीलिस्टिंग में जो प्रमोटर हैं उनके साथ साथ जो इन्वेस्टर्स हैं वो भी सफर करते हैं, क्योंकि अब कंपल्सरी डीलिस्टिंग हो गई तो उनका एग्जिट क्या रहेगा। लेकिन जनरली ये देखा जाता है कि अर्ली वार्निंग साइंस होते हैं, ऐसी कंपनीज के अर्ली वार्निंग साइंस होते हैं। ऐसा नहीं है कि अचानक से कोई कंपनी इस तरह से मतलब गायब हो जाती। तो अगर आप देख रहे हैं कि आज के दिन में जो सर्वेलेंस पॉपअप आता है, कि हमारे यहाँ जो बड़े ब्रोकर्स हैं वो जो पॉपअप देते हैं कस्टमर को, व्हाट डू वी कॉल इट, पॉपअप ओनली वी कॉल इट, कि अगर आपने वो सिंबल डाला तो उसमें आपको पॉपअप आता है कि इस कंपनी का जो ट्रेडिंग है इट्स अंडर सर्वेलेंस एक्शन, ASM, GSM, व्हाटएवर। वो जो पॉपअप है हम उस पॉपअप को एनरिच करने जा रहे हैं। तो 6 और पैरामीटर्स हैं जो हम उसमें डालेंगे। जो एकदम फैक्चुअल डेटा, ऑब्जेक्टिव डेटा है, ताकि जो इन्वेस्टर है वो देख पाए कि इसमें इस कंपनी में क्या हो रहा है, उसका प्राइस टू अर्निंग रेशियो किस तरह से है, उसका कुछ और ग्रोथ कैसा है, लॉसेस हैं क्या है, तो उधर उसको वो इंफॉर्मेशन मिल जाएगी। अब वो इंफॉर्मेशन देख करके वो फिर भी वो स्टॉक खरीदना चाह रहा है तो इट्स फाइन, राइट, दैट्स हिज डिसीजन। और अगर वो उस इंफॉर्मेशन को देख के रीवैल्यूएट करता है अपनी डिसीजन, दैट्स ऑल्सो फाइन। सो हमें ऐसा लगता है कि हमें इन्वेस्टर को एकदम इक्विप करना चाहिए इंफॉर्मेशन के साथ, ताकि वो एक इन्फॉर्म डिसीजन ले ले। अब वो इन्फॉर्म डिसीजन वो किस डायरेक्शन में लेता है वो तो उसकी मर्जी। कौन सा? अच्छा, मुझे तो याद नहीं है, इट वाज इन आवर एनुअल रिपोर्ट। थैंक यू। इनफैक्ट मैंने रिसेंटली रिव्यू भी किया था कि पिछले साल हमने क्या कहा था और हमने किया कि नहीं।
Scheme of merger, the group can be used for delisting only when the holding company is delisting the subsidiary company and they are in the same line of business.
No, not that one. Just got Tangi.
Could I have-
नहीं नहीं